Welcome to Built to Scale, a podcast dedicated to B2B company founders who are obsessed with growth, but who also want to build a profitable and sustainable business. I'm your host, Reem, and each week we're diving into bold strategies, market shifts, and unfiltered founder stories that will challenge the way you think about scaling. No fluff, no filler, just straight up insights to help you grow smarter, scale faster, and build a business that actually lasts. Built to Scale is sponsored by Partner Propel, the risk-free way to drive growth, revenue, and profitability for B2B companies. Tired of expensive agencies that overpromise and underdeliver? At Partner Propel, we handle your marketing and sales strategies, but here's the twist. We profit on a revenue share model. We only succeed when you do. Want to see how this works? We'll create a complimentary 12-month growth plan to help you hit your revenue goals. Visit partnerpropel.com to get started. Today, we have a special guest joining us, Yoni Rubin, CEO and co-founder at MRGN. Yoni, thank you so much for joining us today.
Appreciate it.
So tell me more about yourself. Where are you located? Where are you from?
Yeah, sure. I'm in the Lower East Side of Manhattan right now. Originally from Israel, and I've really spent half my time between the U.S. and Israel, and primarily within the U.S. between Miami and New York. Totally.
So tell me more about your company, MRGN. I'd love to know a little bit more the story behind it, what led you to build it, and how the vision essentially evolved.
Totally. So I'll tell you first what we are today, and then it'll be fun to kind of, I guess, nostalgically go back on that. So today, MRGN increases profit margins for restaurants, basically automatically and blindfoldedly. We're starting with restaurants, but we intend fully on going into the broader small business space. And what we basically built is the first and only, as far as we know, purpose-built business intelligence platform for restaurants right now and eventually retail and others. That means that we are highly centered around the specific restaurant software that they use, their tech stack of whether it's financial models throughout my career. And so about maybe 8 or 9 years ago, I was building model after model, tracking KPIs, managing a business we had been a Series A business. And so a decent amount of money in the bank, cash flowing, and we're still working with these manual tools that are prone to human error. And worst part about them is they're just really garbage in, garbage out. They don't take into account anything outside of your four walls. And however you've inputted that information is how it's going to come out, basically. So I asked myself initially, why do we not have a financial modeling platform in the cloud? Why am I building these things in spreadsheets? Everyone is doing them. Why am I doing them? Okay, let's do this in a shareable, scalable way. And so I set out to build an MVP around that, which was fantastic, worked well, but we were going after early stage tech, and we recognized that only about 83,000 early stage tech companies in the US won't make much for a market for a product that will sell for no more than, let's just say, $150, $200 a month. So that's when we recognized that small business was a much bigger market and one that was in much more dire need of this kind of help. So we made our way into small business. We tested a few different segments and we eventually landed on restaurants. So now we're perfecting restaurants, and then we hope to make our way to retail.
That's amazing. First of all, were you an entrepreneur before starting this business, or was it your first time? Are you like a serial startup owner or founder?
No, this is my first time. I've been a startup guy for my entire career. I've only been with startups and I've loved every second of it. And I would call myself a wantrepreneur for most of that time until one day all the stars aligned in my life and I decided, it was time. So I did make plenty of mistakes along the way. I took my business operations expertise, which was great, but it didn't necessarily apply at certain points of the journey. For example, issues with fundraising. Fundraising is a sales process, and it takes first off, there's a lot of stress involved, but the actual mechanical process of selling your company or a portion of it for the sake of raising money was one that I had been trained more so in the public markets than in private markets. Going to market, our go-to-market strategy has evolved regularly. The atmosphere has changed a lot, by the way. The investment landscape has changed a lot in recent years, the requirements for an early stage startup and so on. So it's been an interesting one.
How's that has that impacted you in any way, or has it not? Just out of curiosity, because we're hearing this all the time. This is a kind of a recurring theme in this space. The dynamics of fundraising have changed significantly. And over the past few years and even months, has that affected you in any way? And if so, how were you able to kind of navigate that?
Yeah, it's affected us tremendously, and it's the main thing that keeps us up at night. But we've been able to work with what we've got. We've been very resilient, very resourceful. And so let me take it back a half a step and tell you why we are where we are right now. And this is my theory. So, a couple things. Naturally, we've got tariffs going on right now, which are basically forcing everybody to put their money into gold. So, there's not a lot of venture investment going on at the moment. Naturally, the AI space has gotten a lot of that attention. Really, the pre-seed space overall for the last 10 years has suffered. And the reason for that is, in my eyes, many years ago, maybe 8 or 9 years ago, CrowdStrike went public with a very successful IPO. Until today, they're doing fantastic. And all of the other kind of sexy tech companies at the time decided they were going to go public as well. And they all failed within about a month or two. And the reason for that was ultimately profitability. CrowdStrike was doing very, very well. The others were aspirational. Retail investors who are LPs as well in venture funds called up their GPs and said, "Hey, don't invest in companies that are not on a pathway to profitability. We just lost all of our money on Peloton, Instacart, DD Chuxing, and so on and so forth." So that really changed a lot of investor sentiment over the years, raising the bar for pre-seed companies. And the problem is that now we've got the entire investment community thinks that you can build $1 billion company on an LLM, which is not the case yet. But we are really abandoning hard coders, true coders right now that are building robust platforms that are going to change the world. So I'm worried that we're chasing that shiny object a little too much right now. But that's how we've gotten here. That's how it's impacted us. The way that we've made it work is by really managing ourselves very, very well, but to the penny. Really, we've raised a little bit of money. We've only raised about now $500,000 of outside capital, which is not an enormous amount, and it's kept us going for quite a while, very, very diligently and persevering. It's been nice.
That's great. I think you're the first person that has a more thorough and almost like historical explanation of what's going on in the venture capitalist world and why are investors being more conservative when it comes to, investing in startups. So I appreciate you sharing that because that's probably the first time I'm hearing it from this perspective. And I think that's definitely some good insight for the audience.
Totally. Appreciate it.
So let's go back to margin, right? So I know you mentioned the challenge you're essentially solving, right? Which I think is pretty straightforward. I'd love to know first of all, can you share maybe a use case of how you've helped a restaurant owner essentially save costs through the use of your platform? Because I think you mentioned a really good example when we had our prep call, and I thought that could be a good way to kind of help us understand a little bit more the power of your platform.
Absolutely. So we recently did a few case studies, but one of them in particular was important and special. We worked with a very, very small empanada shop in the DC area. They had been doing approximately $400,000 in revenue last year in 2024, and they connected to our system, and our system found them another $1,700 in revenue when analyzing only their menu. So the way that we're approaching this kind of tackling this issue is business intelligence is a very broad kind of topic. And it involves a lot of integrations, a lot of understanding a lot of data models. And so it's a complicated thing. I'm sorry, I'm getting a call midway. So we are tackling it in the sense of instead of integrating into every system one by one within the restaurant, all of the systems within the restaurant feed into various problems that the restaurants are going through. So the way we approach it instead is pain point by pain point. So the number one pain point that they told us about was the fragmentation of just abundance of data across the restaurant. Think about all the different delivery channels they've got, all the tablets they've got in there. They're getting tons of data from those systems, Margin Edge, Extra Chef, Restaurant 365, and so on. They've got about 25 different systems that a restaurant could be using at any given point. And that's a lot of data to be working with that they don't know what to do with. So we said, all right, we'll organize that data. And so we layer on top of all of their systems, and then we grab all of the data that we want. And we do what we do is we identify the inefficiencies within their profit centers. So the first primary pain point after business intelligence and the data gathering was, and this was a dire one, was their inability to understand cost of goods. So every restaurateur was complaining about this. They don't have, masters and business degrees and so on and so forth. They're chasing the American dream, just like a lot of us. You can't tell. I'm an immigrant, like I mentioned earlier, so I am myself. But we want to fill that gap. So pain point by pain point, we're giving them insight into their cost of goods first. Next will be labor, everything to do with from scheduling to payroll, dealing with all the minimum wage laws and so on, working our way into competitive landscape, so giving them really a lot of good competitive intelligence. And then eventually we're going to be correlating all of these data points, including the rest of this third-party data. So we're including inflation, taxes, and so on, so that we can give them very hyper-accurate insights on a silver platter relevant to today's economy. So that case study was super, super successful for us, thankfully. We've got another one up on the site, a few more on the way right now, and we're proving that our technology can do what it says it's going to do.
That's amazing. I think you brought up some really, really good points. First of all, the restaurant industry is a tough one, right? Like
That it
when
is.
we look at the industry as a whole, a lot of restaurants are operating on very thin margins. It's very competitive out there. We've seen, increase in rent and cost of goods, in general. So this has been really affecting, this industry as a whole. But in a way, I love that you mentioned that, like the American dream, these are all, a lot of people are immigrants and, they're in this industry and they're trying to make it and they may not be skilled enough to look at the data the same way, someone like you with your profile would. So I love that you guys are helping them through your platform. And it's just everything you said really just resonated as an immigrant myself as well, being here in the US for the same reason as, you and all these other business owners. I think it's really admirable that you've been able to set
Yeah,
up a platform like that. That's so helpful.
yeah. So naturally, obviously, we're in the business of helping. We're in the business of making money, and
Yeah.
it's become a passion because we spoke to about 1,500 small businesses, including consulting shops, retail shops, things like that, and 650 restaurants amongst them were the ones most dire in need of this solution, and it became a passion. I will say I'm a very adamant believer that everybody needs to serve tables as a rite of passage. You learn so much from it, but that's the extent of my restaurant experience. So what we did was we brought on restaurateurs to the team, people who are literally running and owning restaurants day in, day out, restaurant consultants, restaurant owners, restaurant thought leaders. We're lucky enough to have the former CEO of IHOP and Safeway on our board. I'm hoping to have a Wendy's board member in the coming weeks on our board. So we have a lot of interesting folks who are really shedding light on those pain points that we're very, very passionate about. And then, um, and then the other side of that is it was an opportunity that we couldn't pass up. The American dream is one we're all chasing. And think about it as consumers. This is where really like we're all consumers at the end of the day. And we all have problems with prices at restaurants, prices in grocery stores, prices at catering shop, catering companies. We have problems with the service. We have problems with the layouts of the restaurants, whether they're ADA accessible or not, and so on. Software can actually solve all of these problems, allowing the restaurateurs to do what they told us they want to do, which is cook and serve customers, make people happy, put smiles on faces. That's it.
I love this. Do you feel like, out of curiosity, this passion helped you get to where you are today?
That what got me where I am?
Your passion,
The
like you were
passion?
mentioning, you're so passionate about this. Yeah.
Yeah, I would say 100% yes, but I don't think I mean, it could be unique to a lot of us, but it's not, I'm not in particularly special. What I do say a lot is that we're all kind of familiar with the adage of startups and small businesses in general failing pretty quickly, about 90% within 18 to 24 months. And so what I tell people is if you survive those 24 months, you're ahead of 90% of people in the same race, right? If you persevere, you get ahead of it. And the only way to persevere is if you have passion for the space that you're in. So for me, it was all about business efficiency. And now restaurants and food service have become a real big passion of mine, but it was really all about business initially. If I hadn't been passionate about that, I would have quit very quickly.
So it did play a role, but it's not
Big time.
just that. It goes beyond that. Yeah,
Big
that
time.
makes sense.
Yeah.
Right. Thank you so much. I mean, this has been a great conversation so far, and I think you kind of dropped these nuggets, these value nuggets here and there. So I wanted to highlight them a little bit. But yeah, I mean, I know when we had our prep call, we talked about you guys targeting not just restaurants but also municipalities. So what has it been like going from working with early stage tech to now targeting these types of entities?
Great question. So we have three different, call them funnels or pipelines. The first one is the direct funnel, which is to restaurant groups of between 3 and 20 locations. There's very specific reasons we picked that segment, but that's where we're going direct. Right now, we have a full funnel of restaurant groups throughout the country right now. We're tackling one by one slowly and getting amazing, tremendous feedback from them. So those are our closest relationships, which are amazing. Our second funnel is the larger brands of within the food service industry. So think fast food, 7-Eleven, even convenience stores, things like that. Taco John's in the Midwest, Taco Bell, Burger King, McDonald's, so on and so forth. We are not looking to tackle their kind of their corporate environment, but rather we want access to their franchisees. And so we're talking to a lot of them, thankfully, who are they very clearly see the value in this. And so that's our second funnel. And then the third one is municipal, and that's where it really gets interesting. So what we recognized was we are really the only holistic solution to the restaurant right now, and eventually small business generically. Restaurants being in small business, we're very addressable and relevant to economic development efforts. So we turned to a few municipalities, and thankfully Miami raised their hands, and they're kicking off first, where they are actually going to be covering the costs of their restaurant subscriptions on our platform. So as an example, there are 200 restaurants in downtown Miami. Literally to the zero, 200 restaurants exactly. They want to start by getting those 200 restaurants on board of our platform. They'll cover the cost for a period of time. We will be responsible for increasing the health score of those restaurants, which means that we have to be held or kept honest and held accountable. They get what they want, we get what we want, and it's a win-win. So that's been a really nice push for us, because we also have Fort Lauderdale behind Miami, half of New Jersey's counties, and we're starting to open up doors with New York and San Francisco right now.
Nice. That's
Yeah.
great. I think that's a great initiative. And, you know, when we think of marketing and expansion and client acquisition, that's such a great way to look at it, right? It's very out of the box, but it makes perfect sense. And again, you're being held accountable, but you're also, you know, helping, again, businesses stay in business longer, be more profitable. I think it's just a good dynamic to have with these
One of the
municipalities.
One of the
Mm.
keys to keep in mind is that these, and less on municipal, more on the restaurants themselves, is we're only a few years out of a major pandemic that shut down their lives and just flipped them upside down. And one of the outputs of that, one of the results, was that they were forced to use software that they weren't planning on using right away. So it would have been a transition over the course of time. Instead, it hit them right away. And all of these software companies made all these promises to reduce their costs, increase their margins, and they literally did the exact opposite. Every restaurateur is complaining about that as well. So we came out and we said, no, our numbers work just fine without gouging the end user. All right, we will return returns to our shareholders. We will make ourselves money. We'll be happy in life, but we're going to be serving our customers the way we're supposed to be serving our customers. And so that's a major piece of our ethos that we lead with.
Yeah, and you are right. When we think of the pandemic and how it's affected businesses, I mean, restaurants, you're right, or we're really forced to not even think of you know, and debate which softwares to get. They were forced to just get them and just work with them because that was the only way for survival. So that's some good context to for the audience to keep in mind, since you know you're serving that very industry. And yeah, thank you for sharing that. How do you see decision making changing for small business owners in general, and where do you think AI fits in that? Do you see AI play a real role in the decision making process for business owners?
100%. So first and foremost, I'm an ardent believer as well that AI will really become mainstream when we are all using it without knowing so. All right, it needs to be fully embedded in our lives, automating the things that we were already doing without us having to lift additional fingers, which we still have to do today. So that's number one. Number two is really to the former of your question rather than the latter, is that restaurateurs, their problems can be encapsulated in one term. Very simple. They don't know what they don't know. All right. They are functioning day in, day out, not knowing how the economy is affecting their business, how the price of eggs might change tomorrow, and how, let's say, a typhoon or a war across the world is affecting that price of eggs. If there's another pandemic like we all experienced, and we were all wondering, do we furlough? Do we fire? Do we hire? We didn't know. AI is doing that thinking for us. And so what we're doing is we're building a business intelligence platform that they don't know that AI is powering it. It's just literally serving them up with actionable insights, digestible insights on a silver platter. So that's our goal. Is we don't want the user to have to do any or experience an inconvenience, let's call it, in addition to what they're already doing, but rather make it highly embedded and intuitive within their lives so that they don't have to think about it.
That makes sense. I mean, yeah, you're bringing up a good point too in terms of you know, these business owners not necessarily having the knowledge or the even the bandwidth to run certain operations or make certain decisions. Yeah, I think there's a lot of interesting perspectives around AI. We're hearing very positive, then very negative, but do like your insight here and your vision on how this can really better their decision making process and overall make them better business owners without necessarily fully replacing them as employees, for example.
Our goal, the way we describe it, is the restaurant business model has been broken for a very long time, and therefore the analogy that I use is it's a hose or a pipe with holes. We are plugging hole by hole. Each one of those holes represents another pain point that the restaurateur experiences and can be solved with technology. And so one by one, we tackle the abundance of data, then cost of goods, then labor, weather effects on the restaurant, which weather is the number 2 influential factor on the economy. Most people don't know, competitive landscape, and so on. So there's a lot coming. There's a lot happening in the restaurant tech space in general, connecting restaurants to distributors through tech instead of having to submit orders via fax, for example, which are still being used. So we're working on all that.
Right. I think one of the last questions I have for you is any insights or lessons you'd like to offer to other founders that are also building in this space or just trying to, start their own business, just based on the great success you've had and how pragmatic you are about your journey and how you've built this business. Everything seems so intentional. I'd love to hear, if you have any lessons that you'd like to share with other founders.
Yeah, I'm glad it seems intentional because it definitely wasn't. This one is more speculative and theoretical, and I would say that the investment space right now is going after right there, like we said, where they're expecting these multi-billion-dollar companies to come out of a single person running an LLM, and what we have done differently. Granted, we started before LLMs, exploded, and luckily, we got to a point also that we had to rewrite our code, so we rebuilt it AI first, which was amazing. But we're building an infrastructure, a foundation for what will hopefully become a multi-billion-dollar company that helps every business in the world by simply telling them what to do next and saving them boatloads and boatloads of time. And so I say speculative because we haven't yet realized that dream. And when we do, we can look back and say, hey, you know what? Laying that groundwork was the right move. Because if you don't lay that groundwork, you can get to $50,000 or $100,000 MRR relatively quickly with LLMs and everything that we're toying with right now. But beyond that point, you're going to struggle big time to scale.
Cool. Well, thank you so much, Yoni. That was a really great conversation. I appreciated your insights, and I'm sure our audience will as well when they listen to this episode. So if anybody wants to connect with you, what would be the best way to do that?
Yeah, well, first off, Reem, thank you for having me. This was a pleasure, and you definitely know what you're doing, so I've really enjoyed this. With me, particularly, LinkedIn is the best. Obviously, you can go to margin.ai, submit a contact form, but reach me on LinkedIn. My email is also yoni@margin.ai. Feel free to reach out, and I'll do whatever I can to help.
Amazing. Thank you so much, Yoni, for your time today. And if you've listened to this episode and really enjoyed it, make sure you follow us, give us a review, or even share the episode with someone else who may need to hear it. Thanks again for listening in. Thank you, Yoni, and I'll see you next time.